Did you know traditional insurance doesn't cover flooding? Since standard homeowners insurance doesn't cover a penny for damage from flooding, it can be important to have protection from the floods associated with hurricanes, tropical storms, heavy rains, and other conditions that impact the U.S. Just a few inches of water from a flood can cause tens of thousands of dollars in damage. Flood insurance is available to homeowners, renters, condo owners and renters, and commercial owners and renters. Costs vary depending on how much insurance is purchased, what it covers, and the property's flood risk. Remember that the most basic flood insurance coverage would cover the structure, not the personal property, and typically there's a 30-day waiting period from the date of purchase before a flood insurance policy goes into effect. There are exceptions, so if a lender requires flood insurance for a mortgage, that coverage would likely be effective the date of the closing. In 1968, Congress created the National Flood Insurance Program, NFIP, to help provide a means for property owners to financially protect themselves. The National Flood Insurance Program, NFIP, is administered by the Federal Emergency Management Agency, FEMA, or FEMA, which works closely with nearly 90 private insurance companies to offer flood insurance to property owners and renters. In order to qualify for flood insurance, a community must join the NFIP and agree to enforce sound floodplain management standards. Insurance rates are set and do not differ from company to company or agent to agent. These rates depend on many factors, which include the date and type of construction of your home, along with your building's level of risk. The lower the degree of risk, the lower the flood insurance premium. To identify a community's flood risk, FEMA conducts a flood insurance study. The study includes statistical data for river flow, storm tides, hydrologic hydraulic analyses, and rainfall and topographic surveys. FEMA uses this data to create the flood hazard maps that outline your community's different flood risk areas. There are almost 100,000 individual flood insurance rate maps. Just because you haven't experienced a flood in the past doesn't mean you won't in the future. Flood risk isn't just based on history. It's also based on a number of factors like rainfall, river flow, topography, flood control measures, and changes due to recent building and development. Remember, anywhere it rains, it can flood. Flood risk can and does change over time. Flood risks change for many reasons: new development, changes in levee classification, and environmental changes, to name a few. As a result, FEMA is updating flood hazard maps across the country. These new flood maps, also known as Digital Flood Insurance Rate Maps, DFIRMS, DFIRMS, show flood risk at a property-by-property level. When new maps are issued, your risk may have changed as well, along with your flood insurance requirements. If your property is mapped outside of a high-risk area, your flood insurance costs will likely decrease. If you've been mapped into a high-risk area, you will be required to purchase flood insurance if your mortgage is through a federally regulated or insured lender. But you can save money through a process known as grandfathering. You can take advantage of grandfathering by obtaining a flood policy before the new maps take effect. To lock in the lower rate, you must purchase flood insurance before the new maps become effective. Otherwise, the property will be rated using the high-risk flood zone on the new map. If you live near a levee, your flood risk may be higher than you thought. Hundreds of levees across the country no longer meet federal standards for protection. So when new maps are issued, these areas will be shown as high risk. There are actually three main types of risk areas: high risk, moderate risk, and undetermined risk. Residents of high-risk areas. Homes and buildings in high-risk flood areas with mortgages from federally regulated or insured lenders are required to have flood insurance as federally mandated by Congress. These areas have a 1% or greater chance of flooding in any given year, which is equivalent to a 26% chance of flooding during a 30-year mortgage. Residents of moderate to low-risk areas. Homes and businesses located in moderate to low-risk areas that have mortgages from federally regulated or insured lenders are typically not required to have flood insurance. However, Flood insurance is highly recommended because 25% of all flood claims occur in moderate to low-risk flood areas. A lender can require flood insurance even if it is not federally required. Undetermined risk areas. No flood hazard analysis has been conducted in these areas, but a flood risk still exists. Flood insurance rates reflect the uncertainty of the flood risk. Flooding damage can be a devastating emotional experience, but for those who live in high-risk areas, it doesn't also have to be financially devastating. While there are special assistance programs from the government in times of natural disasters involving flooding, remember that anyone who receives disaster assistance in the form of a federal grant or a low-interest loan must cover the building for flood insurance for as long as they own it. Should the owner sell the building, they are required to inform the new owner of the necessity to purchase and maintain flood insurance. Failure to carry flood insurance could result in the denial of future federal disaster assistance. If you live in an area where flooding could occur, why risk not having coverage from the beginning? Remember, anywhere it rains, it can flood. So make sure you investigate the risks to your individual property and plan accordingly. There's one constant in every news reporting on flooding. There are people who didn't have insurance and who didn't think it could happen to them, and they were all proven wrong.